Hello, fellow investors. Today I wanted to review Beyond Meat stock once again. Last Friday, it issued financial statements for the last quarter of 2022, and apparently they were good. So they, according to the news that I read, the company managed to reduce its expenses, and the stock shot up 20%, probably because of a short squeeze. So let's review these financial statements. What do we have on them? Revenue. Revenue has actually decreased. As I talked previously, that's a good thing for this company because it is actually generates losses each time it sells any product. So the best this company can do is actually reduce its revenue to zero, and hence expenses are going to go down. So they are managing to reduce their revenue. So by reducing their revenue, they, however, unfortunately, gross loss, they, instead of having a gross profit, which they declared in the fourth quarter 2021, they managed to generate a gross loss. That was also one of my suspicions because probably the company was putting quite a few expenses. In the previous video, I said that the company was probably allocating part of its cost of goods sold expenses into the research and development or selling general administrative expenses. So this time around, probably feeling that there could be some inquiries into the financial statements, they might have corrected the financial statements, but by correcting the financial statements, they actually admitted that the company generates gross loss instead of gross profit. So the company is losing money on selling, like whenever it sells a dollar for product, it does lose about 2% of money just on the sale. So it managed to finally to admit it. That's really good news. Moving forward, R&D expenses have decreased almost 2 times. Is it a good thing? Yes, it's a great thing. Why do you need to spend $13 million or $20 million per quarter on R&D expenses when you make meat products from beans? I don't know. But in any case, I suspect that part of these R&D expenses, the decrease in in reality, R&D expenses didn't go down. It looks like the decrease in R&D expenses is attributed to the percentage to the increase in cost of goods sold. If you look at the revenue over here and the amount of the sold product, and revenue over here and the amount of sold product, it looks like they simply they decreased their sales, and then they moved part of the R&D expenses into the cost of goods sold. So, okay, they are finally making the financial statements more truthful, but it doesn't look like they decreased any of their expenses. So, financial statements do look more truthful, but they are honest, but they do not look good. Or the only, it looks, if you look at the final numbers, again, revenue went down, and since they generated less revenue, they also generate less losses. That's a good thing. But the other good thing is that they issued a little bit more of their own shares, so they diluted their share ownership, which also led to the decrease in the loss per share. Again, these are good things, but the company still looks like a complete disaster. It just improved their financial statements, but with these numbers, it's unclear how this business is going to move forward. It needs to finally manage to generate gross profit. That's point number 1. And point number 2, it needs to deal with these enormous expenses. So Selling, general, and administrative expenses are almost $50 million per quarter. That's insane. So $50 million per quarter only in admin expenses, while we have left on December 31st, we are left with only $300 million of cash. So the company can maintain its admin stuff only for 6 more quarters. And that is assuming that they don't sell any products for losses. They don't do any R&D, and they don't incur any other expenses, which they obviously do. So anyway, they managed to generate a smaller loss in the fourth quarter of 2022 of almost $70 million, and they're left with $309 million of actual cash in their coffers. If the good thing about the company is that they don't really have any long-term debt, which is great, but I don't know who is in the right mind is going to lend them any money. Anyway, moving forward to the cash flow statement. On the cash flow statement, unfortunately, it's just for the whole year. We can see that they wasted $320 million of cash on operating activities and $87 million on investing activities. So overall, that's roughly $430 million to run the company in 2022, which, if you return back to the financial statements, more than the income statement of more than the loss on the income statement of $360 million. So whichever way you cut it, so if you assume that the company is going to generate this loss in 2023, it is very likely to burn through this cash completely. However, if you take into account these numbers, these investment activities, I would say that they're in reality is a complete expense, because I don't think you're going to ever recover these investments. So I would treat these numbers as a straight expense. So 320 plus 87, that equals to $430 million. Let us assume that the company manages to reduce its expenses by, let's say, its cash outflow, cash bleeding, by $100 million. It is still going to lose throughout the next 4 quarters over $300 million, which is all of its cash left on December 31st, 2022. So good news, everybody. The company is finally making its financial statements more transparent and more honest. But bad news, everybody, it is still looking at a bankruptcy in about 4 quarters. Again, somebody may buy it out sometime later on during the year, but I would assume that the company that's going to buy out Beyond Meat is probably going to buy it out for at really distressed valuations, when it's going to be super cheap. So it still does look like a very interesting short-term opportunity, but I do understand that it may once in a while some of the shorts may get squeezed out. So, but for now, the company, based on these financial statements, the company is going for a bankruptcy. So if you enjoyed the video, like it, subscribe. Cheers, goodbye.